RSI is one of the best reversal indicators out there. From divergences to overbought and oversold, we love to use it to identify market trends and bounces. The issue with the RSI is sometimes it can be hard to visualize those critical zones on the chart. Sure, the RSI became overextended, but where did this occur on the price action itself? So that's why we, at Chart Prime, created the RSI Shift Zone. The RSI Shift Zone takes the RSI and focuses on overbought and oversold conditions, producing key zones on the chart where these events occurred. But first off, what is overbought and oversold? As we know from past videos, RSI is a momentum indicator, showing the momentum of buyers versus sellers. Overbought is when the RSI crosses above 70 classically. The theory goes that there are only so many buyers in a market, so once they start to approach this level of buying cannot be sustained. Therefore, we expect a reversal or at least a small retracement. Oversold, of course, is the opposite, where we assume the selling momentum cannot be sustained. So now we know these are key for price action. How can we use them in an indicator? You'll notice on the chart, zones are produced. These are formed every time the RSI crosses 70 for overbought and under 30 for oversold. The channel's boundaries anchor to the high and low of the candle at the moment of crossing. Traders can use these RSI shift zones as powerful key levels in the market. Treat the channel's high/low boundaries as dynamic breakout lines and wait for the price to cleanly break above these levels to confirm the trend has truly shifted. Here, we were ranging around the zone, and then we see a breakup. This means the buyers are in the market and they are ready to form a new high, and therefore it's a perfect place to enter a long position. They also act as fantastic support and resistance levels. Here, we can use the midline, and we see price loves to find support and resistance at this key market level. For Chart Prime Pro users, you of course have our liquidity zones, which draw price towards them to fill key market orders, making them massively powerful at identifying these key market levels. But back to our indicator here. For traders that prefer a longer term trading experience and swing trading, for example, the RSI length can be increased, and for traders that might prefer to scalp, this can be decreased. The boundaries for overbought and oversold definitions can also be changed from 30 and 70 to any other values required. Using RSI in trading can give you an edge and insight into buyers versus sellers. However, adding in this extra confluence and using these zones to identify key market turning points and breakouts gives a huge edge. So, if you want this indicator 100% free, search for RSI Shift Zone and use this one by Chart Prime. And if you want to see more content like this, don't forget to subscribe and join our Discord.